Good Thursday morning, Market Chameleons. Everyone joining us for the first time. Thanks for checking out the Market Chameleon pre-market show. And there he is, the King Chameleon, Dimitri Pargamonic. How you doing, D?
Good. How are you, Will?
Great. The disclaimer's up there for everyone to see if you want to start with the disclaimer.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And with that, I will share my screen.
All right.
And anyone joining for the first time, if you guys have any questions, you can put them in the live chat on YouTube. Will's monitoring them. He'll read it back to me. Could be anything Market Chameleon tool, data, analytics, strategies you want to discuss. If you want to come on live, we also put out there a link to Zoom in that live chat. If you click on that link, it takes you over to Zoom. Once you get to Zoom, click on raise your hand. You could ask your question directly. You don't have to turn on your video camera. But those are the two ways to ask questions. While we're waiting for any questions to queue up, we'll just take a look what's moving in pre-market hours. And I think, Will, you said there were some questions from yesterday left over with cash burn rates. So maybe I'll start out with that.
Gene had a couple questions about a couple of the smaller EV plays, Plug and ChargePoint, I think.
Okay. So we'll take a look at that. It was in regards to I think their cash positions and their burn rates. So we'll take a quick peek at that. Any new questions come in, then we'll take them after. Okay. So right now, let's start with the pre-market report, and these are stocks that are moving in a pre-market hours. We have the most active stocks. Our list of biggest percentage gainers, biggest percentage decliners. I see 130 stocks made our percentage gainers list, 62 in a percentage decliners list. So from that viewpoint, looking like a bullish bias at the open, a little bit more than 2-1. Some of those ones that are up at the top of the list right now, I think that's American Airlines, Tesla, UAL. And if you go over here, these are the percentage gains. And on the alerts, this little E, that's an indicator that there was an earnings release either yesterday after the market closed, so it's still reacting in the morning, or today before the market opens. They release their earnings. The stocks are trading in the pre-market hours, so we could see the percentage move. This is the volume, so we see 6.6 million in American Airlines, 330,000 Tesla, UAL, 428,000. All of these are up, reacting to earnings. And we were talking about the airlines a couple of days ago. Well, you said that you were at the airport and it was just packed, right? And we're seeing that people are traveling. Seems like right now business is good.
And rumor is you can take the masks off now too, which makes it a much more comfortable flight.
Right, you could take the masks off, and even with these high oil prices, it looks like people are still traveling. People are buying tickets. So right now, airlines looking good. Tesla reported, guess that I didn't read the full. I'm gonna read it later today. Looks like they had some good earnings there. So up 8.2% in a pre-market. I think they were down maybe even yesterday, recovered and then somewhat today. Let me just take a look real quick. We click on Tesla here. So we see they were down 5% yesterday prior to the release, right? So down almost $60, up 101 in a pre-market hour. So gained all that back and more, up 10.3%. I'm just going to look. When you click on a symbol here, it brings up more analysis below. So these are the pre-market move, 10.3%. If we come down here, this is what the chart looks like in a pre-market. So you could see here, just kind of started going way up on here. And if you wanted to see minute by minute action, so these are, you could see minute by minute what the VWAP was, the volume for that minute, the number of trades, the change from 1 minute to the next, the high and low on that minute, and the ending bid and offer. So this is a minute by minute chart over here. Down here, you got the latest news headlines, so you could kind of click on it to read more. But since it's earnings, we'll just see really quickly. These are how Tesla behaved during earnings. And so I'm on the earnings stock pattern here. This is the day of earnings. So we have chart prior to earnings. So this is how Tesla performed leading into it. You can see here 2 weeks, 1 week, 3 day. These are the earnings dates. These are the performance, 2 weeks prior, 1 week, and so forth. This is today, day of earnings. So opening gap, this is kind of where we are now. We see 55% of the time it opened higher, 45% lower. So kind of even there, but on average gained 2%. So the up moves on average exceeded down moves. That's what this is saying. The absolute average move, just the magnitude of the move, 5.9% in either direction. So around 6% on average will gap up or down. Right now, up 10%. So that's exceeding the average move. But the high move, 17.2% last 12 quarters right here. So it is within the range of the high low.
I mean, I know we talk about this a lot, but I mean, you were talking about Tesla. Tesla's like the one high flyer that is still running, right? You look at, I mean, Netflix, for example. Netflix was as high as $700. And Rob just mentioned that he read something that said, some analyst is saying it could go down another 50%, which seems shocking to me. I mean, it's PE. I don't know if that's adjusted yet. It's shown as a 20 right now at its new stock price. And
I think that, like that, Netflix, one of the things is now they're getting a lot of competition. Netflix used to be kind of this leader tech company, very innovative, they're just blowing everybody out of the water. I think they put the traditional video rentals all out of business, right? By the way, when Netflix first started, I think they were delivering movies by mail, right? That's how it started. I think.
Yeah, no, I've been a subscriber. My wife, I should say, has been a subscriber since then.
Yeah. So they started out. You'd go create an account on the internet. So they're always internet based, but you'd create an account on the internet, and then you would scroll through, their movie list, and then you would pick 2 movies. They would send you 2 DVDs, right? Then you could watch them. When you mail them back, you could order 2 more. That was, and it was all done through the mail. And honestly, like I was even thinking, how are they going to stay in business that way? The DVDs would break, you'd send them back. It costs money to, every time to ship them there and back. But I think then once streaming came, that's when they really took off. Like I think they had great technology, very user friendly, and once streaming came on board, that's I think when they really started taking off. But now everybody's streaming.
Well, and it's the content, right? They've also been able to create content that drives new members, basically.
Yeah, they have their own content, but so does Hulu, right? So does Amazon.
Yeah, Disney's a perfect example, right? And basically all those companies have now lost, and they were, COVID stay-at-home plays as well, right? There was never a better time if you were in that space to have people sitting around on their couches just watching, shows. That's changing and has changed. So it's going to affect revenues. But you look at Facebook back down around 200. I mean, it's beginning to look almost like a value stock. 14 PE.
Yeah, we could take a yeah, here I was looking at it. Let me see. Here's Facebook. It was down 7.8%. Right. Yep. 200. It's starting to really, yeah. Look. Let's just see how, you know, on the chart, where is it going down to? Like, here's where was it in 2020? Kind of like right around here, 189, as low as 170. So it's going back down there. We'll see what they say earnings. I think one of the things with Facebook is, and it could be a problem with, Twitter and Google, is that it's all ad rev. It's funny that if you look at Netflix, they're starting to say, well, we can't be all subscription based. We need to create an ad revenue, feature where they offer either discount or for free, and it's supported by ad revenue. Facebook might be going the other way and saying, well, we have all this ad revenue, but we can't rely on it because now the rules are changing, the laws are changing with privacy, and they might have to start thinking about creating subscription-based services. Apple's creating subscription-based services, and Facebook might be pressured to do that, go the other way, right? But I think one of the things that impacted Facebook was the changes Apple was making. I think even Google was making to protect people's privacy, not to share data. They were relying on that. But laws around the world are also starting to change, and it's going to put pressure on Facebook. Perhaps even, from Twitter.
Netflix is getting close to where it was in 2017.
Yeah. Yeah, it's all the way back. Yeah, who knows? Who knows? But they definitely have. I think they were discussing it this morning on CNBC. At what price do they become a buyout target? And I'm not sure, but I don't know if they're low enough yet. Is $100 billion market, is that low enough? I'm not sure. Because who's going to buy it? Is the question. Does Disney buy it? Does a big tech company, maybe Google? I don't know. But definitely, we're looking at some FANG stocks, right? Facebook, Netflix, both in the FANG stocks doing. Let's see how year to date trading stats. So I'm on Facebook trading stats. So here we have Facebook 1 year performance down 33% versus SPY up 9.3%. Year to date, Facebook's down 40%, SPY down 6%. So well underperforming, right? Even on a 3-year basis. Look, on a 3-year basis and a 5-year basis, Facebook is underperforming the S&P 500 at this point. All right, 3 years up 12.4%, S&P up 59%. You could take a look at Netflix. By the way, one I think with the Netflix, what I think a good takeaway is, we get a lot of, like some people come to the website and they're just starting out, like trying to learn about trading and trying to learn, about financial assets. And I think that some people's mindsets are that a good trader, they think this is what makes a good trader is that they're never wrong, right? They're whatever trade they do is always right, or they're 100% or 90% or 85% always picking the good trades. And it's not about, and that's not really what defines a good trader. Good trader, you should have, your profits should exceed your losses, and you should make good trades and manage. But in Netflix, right, a good example is Bill Ackman, right? Hedge fund manager, billionaire, billions of dollars. In 3 months, 4 months, is taking a $400 million loss and moving on, right? So anybody who's following, the people who consider this smart money or big money or what, if you're following him on that trade, and a lot of people did, right? That was public information. Bill Ackman bought a bunch of Netflix. That was when it was down the previous quarter, right? Bought a bunch of Netflix. Now it's down another 25, 27%. He's out with the 400 million. So people who are traders are going to have losses. They're going to make mistakes. It's that you're still able to take losses and stay in the game, learn from the mistakes, and keep moving on. And you can't imagine that you're never going to have a loss, or you're never, because this is a game of risk, right? Everything here, it's all risk in stocks or options.
Yeah, well, life is a game of risks, right?
It's a game of risk, right? It's risk. It's going to be winners and losers. And I was watching basketball yesterday, right? And think of it this way: in Philadelphia, some 76ers Sixers fan, they were down most of the game. They were taking losses. At the end of the day, and it was in overtime, they won, right? They won by one score, right? So but you can't come into the basketball game thinking you're gonna hit every shot that you make, and you're gonna block every shot the other team makes, and you're gonna be 100%. They're gonna be 0%. Doesn't happen that way, and that's not how it's played. So just a good lesson to even see, hey, Bill Ackman and a lot of people, a lot of hedge funds, a lot of billionaires, they're going to take losses because it's risk. Netflix here, year to date, down 62.5%, that's a pretty big, right? Down versus SPY down 6.1%. On a 1-year basis, down almost 60%, down 9.3. I mean, up 9.3 for SPY. So you could see on a 3-year basis, they're down now versus SPY. They're on a 3-year basis, Netflix down 37%, SPY up 59%. So that's Netflix. And you're right. Well, they were $700 within the last year. Netflix.
It was probably last summer.
Yeah.
I mean, so I'll tell you, you look at Disney, and I know the parks are probably due for a comeback, and I'm sure that will drive revenue. But they had a big run up, and it sold off since. But its PE is still like 70 something, and so much was built into it.
Disney,
DIS, and so much of Disney rallied during the COVID crisis, and the reason it stayed high was its streaming software, right? So it's going to be interesting to see what, like, is it still a growth product mix for them? Is it going to help Disney?
You can see Disney
as the whole streaming market started to cannibalize itself. It's really interesting.
Well, you could see Disney also down 4.6% in the last 3 years. So if you held it for 3 years, S&P up 60%, Disney down 4.6. These are big cap. That's why diversification, right? It's important how you're moving your risk around, how you're managing your risk. But these are high cap: Netflix, Facebook, Disney. All high cap stocks. Good companies, right? They're good companies, but you can see what can happen. Tesla's probably the other way. Let's take a look. So here's Tesla's 3-year performance. It's up 1,700%, right? Versus the SPY 59. Year to date, still down 7.5%. Or 6.1, but I think he'll gain it back today. But so there, like you were saying, well, Tesla keeps going, but some of the other one, Netflix, Facebook, they're At one point, they were like Tesla, right? That's what they just kept going higher and doing better and better. So you don't know when when the brakes will hit.
Yeah, and it is amazing because I listened to the call yesterday, and the numbers were so much better than the top line numbers most analysts gave for margins and revenue, and and it's amazing that other car companies actually pay for the credits that Tesla gets from the government for producing, I guess, their tax credits. So they do like hundreds of millions of dollars in resale of these credits to other car companies who aren't producing enough EVs yet.
Let me see Tesla, how much, let me just see how much cash they have on. So we'll talk about the cash flow because somebody brought it up, Plug and the CHPT. So I'll go to them. But let me see if I could take a look at, I don't think we probably have the latest today's yet. We're getting our data from Morningstar, so they probably didn't update to the latest. But before this, before today's report, it looks like they had $18 billion in cash on hand. All right, so not a huge amount. Let me take a look at Apple. Just curious, how much they have on. Oops. Let me refresh my screen here. All right, I don't know why I'm getting some slowness here. All right, I think my internet is slowing down here. But I think, I was just gonna take a look at. All right, here it goes. So this is Apple. So Apple cash on 38 billion right now, last quarter. So that's what they're showing cash on hand. Let me see. What were we looking at? You're asking about Plug?
Yeah, Plug was one.
All right. So, sorry, I think I'm having issues here with my internet. I'm gonna have to refresh my screen. So sorry, guys.
No worries.
Right, but we'll take a look at Plug. I think somebody was asking, well, how much if you're not making money, right? If you're losing money, if you're losing from operating, we'll take a look here. Why is this? Fundamentals, let me look at cash flow here. So if a company, right here, this is the cash flow statement, right? So we have the ending cash, so you could see that the cash on hand did go up, right? This is the annual, so it looks like they did have cash that went up. So where can cash come from? Well, it could come from your operating profits, right? So you could make profits and your cash could go up that way. It could come from investments. So you can see it's not coming from operating cash flow, not coming from profits. It can come from investments. So if you bought Bitcoin or you bought a piece of real estate and it went up and you sell it, well, then more cash comes in. So it doesn't look like it's coming from investments. Third place it could come from is finance, right? So you could sell bonds, sell preferred stocks, sell secondary offering, more stock. So here, that's where it looks like so far it's coming from, the financing side of it. So cash cash on hand did go up, and it looks like it's coming from the financing side of it. So we'll take a look here. Operating cash flow, you could see, is negative. So they are burning money, right? So as far as their core business of operations, it looks like, from quarter to quarter, they're losing money, right? Their operating expenses are exceeding their operating profits. So if that happens, it's not sustainable. You got to get money from somewhere, right? Or you go to zero and you can't pay your bills. So here we see operating cash flow negative, investing cash flow, that's also negative. And that doesn't necessarily have to be, and it's not necessarily a bad thing, because if you're making investments, you're going to have negative investment cash flow, right? So if you're taking your cash and you're buying things because you're making investments for the future, you're going to have negative cash flow from investments. So it's not necessarily a bad thing, because companies have to do that, right? So if they're not generating money from their core business, if they're not getting if they're making investments and they're not getting money back from investments, then they have to get cash from somewhere. And this is the financing. So you could see here, financing cash flow up 3.6 billion. Where did it come from? So from continuing finance activities, and this is it, right? That they issued some debt, but not a lot, $20 million worth, but $3.6 billion came from common stock. So this tells me that they had a secondary offering, and that they issued more stock, and they took the money from that secondary. And that's not right, because it dilutes investors, right? So when a company says we're going to issue more stock to raise more money, it dilutes existing investors as well, because now you got more shareholders, right? You have more shareholders than you have before. If you have more shareholders than you have before, that means that there's a bigger pool of people who have claims to the earnings, to the assets of the company, and so forth. So if you continue doing it, you continue to dilute investors by issuing more stock. But that's where it looks like, what happened with Plug. So we're right up at 9:30, Will. I'll leave it at that. No questions.
No questions. And unfortunately, Jean wasn't on. That was a great description, D. Maybe she'll watch it and have some follow-up questions tomorrow. I'm wondering if you can guess, in Europe right now, we have Lauren was on. He's he's close to pulling the trigger on a Tesla. So there was a lot of Tesla commentary about Teslas. But the question is, what do you think it costs to fill up per gallon right now? And I think Lawrence is in France, but I could be wrong. What do you think it costs a gallon right now to fill up?
In France?
Yeah, to
put
in
dollar terms, I guess.
In dollar terms, yeah.
More than here for sure. So I would say double whatever we're paying here.
Yeah, you are good.
Like
yesterday I paid $4.01 a gallon. $8 a gallon.
$8, yeah.
What do you think would happen here if it got to $8 a gallon in the US?
I think that would be very taxing to our economy. We're a big country. We move things around a lot. We travel a lot. We use transportation a lot. I think it would be very taxing on our economy if that happened.
Yeah, no, it would. The Europeans are much more in a much better place when it comes to fossil fuels and dealing with it, for sure. I mean, I can't imagine how, the conversations I would be having with my neighbors at $8 a gallon. It would be,
but some people think if we get there, that will spur or incentivize investments into alternative energies, right? So there could be, maybe if we get there and it's going to be painful, it's going to definitely not be great for our economy, but at those prices, are we going to see more innovation and investments in alternative energies? So, maybe that would be the positive side of it.
Yeah, no, that's true. And that's why Laurent is looking at a Tesla strictly for that reason. To move into the EV space. I mean, there are lots of problems. So it's still from electricity, right? Not to carry the show too long, and also the batteries in volume become a real big problem because of the amount of earth that has to be, strip mined, basically, which strip mining isn't a very environmentally good process. To get battery is incredible. I want to say like 5 million tons of earth have to be moved for one battery. It's an incredible number. So,
it's not as clean as everybody hopes it would be.
No, at the end of the day, it could be dirtier. Who knows? But certainly the prices right now make it very compelling to look at an EV.
Definitely.
All right.
Definitely.
Great show, Dima. Right. Thanks so much.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.
Trade in peace, chameleons. Have a great day. Bye-bye.